Hello everybody, this is Max Farrell from DexFXMarkets.com. Today is the 20th of August 2020. In this training session, I wanted to quickly show you a few things that have become sort of, I guess a little confusion or distraction in my honest opinion. The idea that the simplistic value of the Dex Atomic with a 50 MA, arrows, support and resistance, and some view key points and visualizations that I provide, this strategy is very strong. Now, are there ways for you to tighten it up and use some external systems to help make it a little better for you? Possibly. I don't know all things of everything and what could be done at data levels and what pairs it could be done on, but anything could be used to show a better analysis at any particular time or pair. What I mean by this, there is a thread that we went through that we were talking to a few people about using the exponential moving average instead of the moving average. The value of the moving average is simple, okay? We're not looking to keep a process of, the exact area of where the last 50 bars would end and start, and if the arrow is fully above or fully below or too far away. There's many degrees of separation on looking left and seeing how well the pair has performed over a period of time. These analysis, if you will, okay, of mass amount of movements. Doesn't matter if the bar is above or below the MA at that point. It's just what the previous time is looked at of that average. The technical values of the MA, whether the arrow is above or below it, isn't the line in the sand that you should use to make a trade be solely in a direction. You shouldn't be using just that. If this arrow is above, then there's always a buy and we never do a sell. But looking left and analyzing the way the markets behaved in relationship with that. I came up with a mentality a long time ago called trading with the clock on the wall. And you could trade with the clock on the wall at 3 o'clock, go to the Euro USD, and put a buy in every single day. No other charts, no other systems needed, just exactly 3 o'clock, go put a buy in. Now, at that level, that's the most simplest plan of trading that I could actually tell you. But you will find people who will go and look at the system and say, well, what if I go there at 301? Or I can't trade at 301, I can only trade at 4. Well, then that's your deal. It doesn't make it better or worse than mine. The actual strategy is strong because there is a commitment to a strategy and to a process. But don't be confused that there hasn't been a lot of work on why we fire the arrows off. Why don't the arrows just fire off every single hour? Because the arrows have a priority system that why they fire off at certain times. And why? It's the mentality of other priority systems underneath. The arrows are a combination of maybe 6 other systems that I put all into one. And when those 6 systems happen, the arrow fires. Now, in some cases, you have a downward trend and you fight against that and you want to get into that arrow, but there's no previous information. My point being is that before you begin to say, well, I've been using the estimated moving or the exponential moving average instead of the moving average and it works better for me, is all a matter of perspective. I could show you little tricks on how to use Bollinger Bands or stochastics or off-chart methods. It doesn't really matter what you're going to be using at that point as long as you're going to be using it and you're clear with the results. What we have found, and unless you have tested every single pair at every single time like we have, then what we have found that the moving average gives us a smoother transition process of knowing the average over the last 50. If I were to add on the 50 exponential moving average, you would see there's not too much difference. Could it isolate some trades for you? If you're doing solely over under, or if you're doing the all in, it doesn't really matter. But if you're using the over under strategy, there may be one trade out of, say, 40 that you may not take because it wouldn't be in the area that you need it to be. Okay? But for the most part, they're going to operate in the same fashion. But it still comes down to the same mentality. Arrow fires, you look left, you find a zone, you buy the zone of the statement on Nadex after pullback, and you put a working order on. That's simple. There's other methods and other systems that you can apply, but let me tell you, you start just adding all kinds of things in here, you might as well add a Bollinger Band in. Ooh. If you add a Bollinger Band in, oh, let me get that. You're going to need to know what levels and make the relationship on when you buy and when you sell. But again, it's making a strategy. And if you add the Bollinger Band in, you might as well be adding stochastic in because, you know, what's a Bollinger Band without a good stochastic? So let's do that. And so now when you add in the Bollinger Band with the stochastic, when you are oversold and the Bollinger Band's at the top level, make sure you put in for a sell unless it's below a variance of 68.20. And if you're going to add in a stochastic, you might as well be adding in everything else you could possibly think of. How about an RSI? Now, the more stuff you got on your thing doesn't make you look smarter. In fact, it kind of makes you look overworked. I've been down this road before. So let me keep you apprised to what we're really trying to do here. We're really trying to make it simple. Sweet and simple. That's the KISS method. Keep it sweet and simple. You don't need a lot. You just need to be able to look a little left, follow some rules, battle your mentality, and simply create patience and discipline to find consistency, to apply volume, and get to your goal. That's it. See you next time. I'm Max Farrell. This is XFX Markets. And as always, trade well.